Hi, this is Amte with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 27th of July. And the FTSE still firm, despite the Fed's rather questionable interest rate hike yesterday. We have the market pushing through basically post-May resistance around 7,700. There's a line of resistance there from February around 77.60. End of day close above that. We could open up a journey towards the highs, and in fact even a record high, which would be that March resistance line projection at 8,200. The reason for the relative enthusiasm is the way that we've had a special cross, I would call it, where the 50-day line crosses down through a rising 200-day moving average. That is actually in some ways even stronger than a golden cross, and so far it is working on the upside. Also obviously means that we are heading up into a golden cross, because the next time the two averages cross, then the 50-day line will be crossing through that rising 200-day line. In terms of support, if we break down 75.75 at the 200-day line, the initial support, worst case scenario at the moment, 74.50 in that July or June resistance line break that we had. If you're cautious, you wait for 77.60 to be broken before assuming that we're off to the races in terms of a new leg higher for the latter part of the summer. Onto the DAX, which has been marooned in a little range over the recent past, but looks as though it's ready to take off. We had a final test of the rising 50-day line today. Hopefully it's a final test, and this sideways consolidation above a rising 50-day line is a very strong technical or charting signal, in fact, and hopefully that'll work this time. End of day close through 16,300 is all we may need to take us up to a new target there, or the existing target actually, 17,200 at the top of that rising trend channel from back in August last year. Hopefully we could get that by the end of August this year, and so that would be a decent performance after the July bear trap from below June and actually May support that we had briefly earlier in the month. RSI at 59, right in a good place there, which has been the case for the last couple of weeks. On to the Dow, which I think has served up 12 or 13 up days in a row. I think it's the best performance since 1987, when I was a young person. Current situation is that we found support at the old resistance line target, the March resistance line target, 35,200. Above that, we're looking for 37,300 as soon as the end of August, so mirroring what we're really seeing on the DAX. And I suppose it does imply that hopefully even the FTSE would actually step up to the plate and start moving to higher territory. On to Bitcoin, which has been disappointing so far this month. We thought we were going to get a bull flag break to the upside. Well, some of us did. But actually all we've done is actually take out the floor of the bull flag, 29,500, and test the 50-day line, which was a scenario which was expected. End of day close back above 30,000 could get us back on track and head up to the last summer's resistance line projection as high as 36,000. And that could happen as soon as the end of next month if we get a pretty quick push through the 30,000 area. RSI at 47 or just under 47. So we'd like to see that above the neutral 50 level, and like to see this above 30,000 to then confirm that we are ready to move higher after the little rug pull that we've had below 29,000. Or below 30,000 rather. There's a resistance line there from earlier in the month, so maybe some people will wait for that to break as their trigger. Onto the stocks, and the first one is a requested stock, which seems to be gingerly heading higher after the rather painful look that it delivered last month. Looks like we're in a rising trend channel base with Allergy Therapeutics. Broken recent resistance around 2.1 pence, which is nice. Above that, looking for up to the 50-day line, initially at 3.5 pence. By the end of next month, especially while we remain above the 1.8 pence level, which is key because it's the floor of the rising trend channel. On to a stock which is also worth looking at from a charting perspective at the moment. Here we've got Aferian, and we've got the first target. Well, the reason for looking at this is that it's a bear trap gap reversal, so a bear trap from below the June support at 13 pence, and then now we're back above that. We're also back above the 50-day line, so looking for an initial target here at 19 pence, which hopefully won't be long, and then maybe by the end of next month up to 24 pence at the upper parallel there from May. But the key here is that, well, in fact, it's actually a bear trap island reversal because there is a gap there, a gap down there from back in June, which is an even stronger signal than, or implied signal than, a bear trap gap reversal on its own. Moving along to a stock which has been one of this week's best performers after quite a long time in the wilderness, one could say, Amala Foods. Here we've got the stock basically powered by bullish divergence. We've got a rising 50-day line already, which is pretty impressive, and the view now is that above resistance on the way down around the 0.14 pence level. We're looking for 0.25. We got quite close to it actually yesterday, 0.22.5. So that looks as though that is a proper level to go for while we're above 0.14. Ultimately, maybe as high as the 200-day moving average around 0.31 by the end of next month. So quite a decent turnaround there. A stock which has not been for widows and orphans is Amte Power, and here all over the place in terms of this attempted basing. We had a nice rally earlier in the week, just breaking that neckline resistance at 10 pence, and that's the line in the sand. End of day close above 10 pence, and we could retest yesterday's 13 pence, or maybe go a little bit further into the mid-teens. Otherwise, it's probably back down to the 5 pence area once again. So all over the place from that. But there is bullish divergence here. So we had the lower lows last week. But the RSI trace has been strong, so that is why it's worth waiting for a potential end-of-day close through 10 pence, when the best case scenario would actually be back up to the floor of that gap on the 50-day line at 24 pence. But I think one probably shouldn't get too excited at this stage. Lots of talk, interesting talk on Boohoo, which I can't relate, but here we've got the shares finally breaking out through the 50-day moving average around 36 pence and neckline resistance at the 37 pence level. Above 37 pence, looking for the 200-day line initially at 43 pence, maybe in the next week or two. Maybe as soon as the end of the next month, we get up to 50 pence at the top of that rising trend channel base, which has been in place since May. Moving along to Cleantech Lithium, which has had a bit of a roller coaster over the last week or so. Unfilled gap to the upside basically at the middle part of this month, and looks as though the shares found support, or finding support, just below the 200-day line, the grey line there, at 50 pence. Decent end of day close above the 200-day line, which is rising, would then suggest we can go on and retest last week's resistance, the peak there around 66.5, and we've been looking for 70 pence by the end of next month. But the 50 and 200-day lines both rising now, so in theory we're in the run-up to a potential golden cross, which is obviously a strong position, and we also had an RSI bounce off the neutral 50 level, which can be a continuation signal as well. Seen somebody on Twitter get excited about CapEx, so let's have a look at that at the moment, and probably right to be excited. We've got a falling wedge breakout, and also we've got a triangle target there as high as 2 pence, which could be hit by the end of next month, given the way that the 50-day line is rising quite nicely at the moment. And above that at 1.4 on an end-of-day close basis, 2 pence plus could be seen over the next month. Another request is Destiny Pharma, which looks like it's preparing to meet its destiny at the moment through the 200-day moving average. Unfilled gap to the upside, second gap actually in the last month. So we love those bear trap reversals, bear trap gap reversals, and also gaps as continuation signals above the 200-day line at 37, looking for up to 47 pence over the next couple of weeks, maybe even sooner, at that old November resistance line projection. The shares, though, look strong enough, obviously, to retest the initial highs of the year at 60 pence, maybe over the next 1 to 2 months. So a nice turnaround there with that those double unfilled gaps to the upside. On to another requested stock, which is eEnergy, and here trying to break that line of resistance there from August last year. That's around 5.7 pence current levels. If we can get through that, maybe on an end of day close basis, then the initial target here, 7.5 pence, then obviously looking for maybe up to 9 pence over the next 4 to 6 weeks. But the key here, I suppose, is holding above the 4.6 pence area, which was June resistance on that daily chart. Moving on to one of the better situations of the last last few weeks, probably the last year in terms of percentage recovery. Here it was interesting that Itsarm exactly hit one of our potential target there, the high potential target there at 5.7 pence. So the charting working there, that was derived by the old support for the shares at that level back in the start of the year. Current situation is that ideally we'd like to see the shares remain above yesterday's low around 2.4 pence. If they can do that, then we could be seeing 5.5 pence or even 6 pence by the end of next month. But it has to be admitted, it looks a little bit tired with those long candles there in the 4 pence plus area. So maybe at the moment 4 pence is the initial target ahead of potentially 5.5 or 6. On to stock which has delivered the goods today, Mila Resources. Here you can see that we were looking for a potential break to the upside after the gap close buy signal that happened in April. So that's rather forensic charting. The shares managed to consolidate sideways since then, and obviously perhaps they were waiting for today's news. Current situation is that above today's low around 1.8, we're looking for up to 3 pence by the end of next month or even sooner, which would take the shares back to where they were in October. In fact, if you think about it logically, shares should be much higher than that because the Liontown news today was not in the price back in October. Moving on to a stock which I haven't looked at for ages, and here we have NAHL Group. Always nice to see a little breakout. The breakout was preceded by unfilled gaps to the upside, especially at the turn of the month, and that means that we're looking for the top of the rising trend channel there from back in, this time last year, as high as 64 pence by the end of next month. Upside ideally in place while we're above 47 pence, the April resistance. Onto a stock which has come up with decent news today from Oxford Cannabinoid. Here we were already looking at this as a potential buy last week or the week before with the unfilled gap to the upside through the rising 200-day moving average. That proved to be a correct signal, and we've had another unfilled gap to the upside today above the 50-day line around a penny, looking for 1.6 pence, perhaps as soon as the end of next month. Moving on to the last three. The first one is, basically a lap of honour with Ocado. We were looking for this to break much higher. There was obviously whispers of takeover speculation, but so far we haven't had that. Initial target there around 620, which was done. Next target was 715. The third target, £9, and I've added a new line in now, so the next target up to £10.50 over the next couple of weeks, hopefully. And actually the way things are going, looks like we'll go much more. You can see the telltale unfilled gaps to the upside. I think there was one, I think we've had four actually, if you look closely. That all started with a bear trap gap reversal in June. So Ocado really delivering the goods for chartists and maybe for other people as well. Stock that I covered earlier in the week has decided to move higher as well. Plexus Holdings, the reason for the rationale behind the potential buy here was a bounce off, or a bear trap bounce off the rising 200-day line, and we've now got the 50-day line rising as well at 2.92 pence, and an end of day close above June resistance at 3.4 pence should be more than enough to get the shares up to the top of that rising trend channel from last June, as high as 5.5 pence by the end of next month. Finishing off with another request. There have been so many today, it's all very exciting. Skinbio Therapeutics, and here broken a line of resistance from November at 15 pence, where will be broken through the 200-day line at 17, and above 17 pence we're looking for the shares to progress within a broadening triangle from last August as high as 30 pence, and we may even see that by the end of September. I think giving it a couple of months is probably fair, but hopefully it will exceed expectations on the time frame. That's it for me today. More updates tomorrow.